Let us help you reach your peak in retirement. It's time for Retirement Elevated with Sean Lee.
Let's talk about commissions and fees a little bit. It's always on people's minds when it comes to things. Obviously, the market's better than it was in 18. And so, those things are going to happen because nothing's free, right? There's no free lunches. So any financial advisor is going to get paid in one of those two fashions. So can you explain a little bit of the difference between fees and commissions, Sean?
Yeah. So, it's fees are, in essence, a fee paid to an individual for service. So as an advisor, our firm, we're held to what's called the fiduciary standard, which that gets thrown out a lot. But to give you an idea of what that truly means, it's a moral, ethical, and legal obligation to do what's in your client's best interest.
The fiduciary standard, yes.
The fiduciary standard. Yeah. And following the fiduciary standard, you can charge a fee for service. And that can come in the form of one of two ways. You can charge a flat fee and you say, hey, Sean, I want you to build me a plan, but I don't want you to deal with any of the investment management. I don't want you to do any of that. I want to manage the money on my own.
Okay. Just
build me a plan. We can charge a flat fee, much like an attorney would or a CPA would for services.
Okay, gotcha.
Then we've got the percentage of assets, that fee. And in essence, what that means is, hey, Sean, I want you to build a plan. I don't want to manage the money. You've got the plan, but I want you and your team of experts to manage the funds for us.
A lot of times I don't have the time to want to manage it. Yeah.
And so then our firm charges a fee based on a percentage of assets that we manage. So that's the fee-based side. Now the commission-based side is in essence compensation that an individual may receive for selling something.
And that's kind of what we think of as like brokers and Wall Street and that's kind of our mental image.
Yeah, the loaded mutual funds or whatever it may be that a commission is paid to that Wall Street broker to sell a product or a trade cost, to sell a stock or whatever it may be.
Okay. Other than fees paid to an advisor, what are some other costs that people may encounter inside the financial world? Now, we hear a lot of times, you see these commercials now where Charles Schwab and so on and so forth are saying, no fee transactions like for buying or selling a stock, What are some other fees we might see? There's a lot of times there's hidden fees that people don't realize.
Yeah. It depends on the vehicle. So you look at a variable annuity, for example. A variable annuity has the insurance costs. They're called mortality and expense charges. They've got administrative costs. If you buy a fancy rider, to provide income or whatever it may be, there's a cost for that. And then if you're using a variable annuity structure that has what are called sub-accounts, they look and smell like mutual funds, but they're issued through insurance companies. They have their own operating expenses. And that's really where in the annuity world where you hear, oh man, annuities are so expensive. Well, they could be, or they could be pretty cost effective, but those are the fees that come when it comes to the variable annuity side.
Gotcha.
Now, mutual funds themselves, they have what are called operating expenses. So those are
expense ratios, things.
Yeah. So you pay those to the mutual fund company, but sometimes there are what are called sales charges up front. Or on the back end, and those are basically commissions to the person who sells the product. So as you go through this world of determining, this vehicle or this vehicle is right, just understand what the fee structure looks like. And my opinion on fees is very, very simple. I'm a value guy, and so if you were to come to me and Mark and you said, hey, Sean, I need you to do a full evaluation of my portfolio. I need you to tell me what's going on, risk fees, exposure, whatever it may be. And we got to the fee discussion and we said, Mark, your fee structure is 2.25%, for example.
Okay.
On the surface, you might be like, well, that might be high, that might be low. It's really in the eyes of the beholder. If you said, Sean,
well, what am I getting for that, right?
Yeah. What am I getting value-wise? Do I have a full-blown plan? Is my plan clearly defined, and I know where my income sources are going to come from, and how I'm going to withdraw money, and what the tax situation is going to be?
And when I call you, do I get to talk to somebody versus hitting 4 different 100 buttons to get to go around in a circle? Yeah.
Is there a real body
exactly.
A service team that can help us? And so if you said yes to all of that, I'm getting all the value from my fee. Perfect. Your fee structure's in line. But if you say no, well, then maybe that fee's a little bit too expensive.
Okay, gotcha.
And you need to find a fee, an appropriate fee structure to get the value out of it.
Gotcha. Right. Well, so it's kind of like, in some ways it's like steak shopping. If you're looking for a good steak, there's probably a restaurant you want to go to for that high quality steak. You probably pay more for it than if you went to, I don't know, like a buffet style type thing, right? Where steak happens to be on the menu. Well, you're probably getting skirt steak and it's probably dry and all that kind of stuff versus a big old nice juicy, filet somewhere. It's a little more expensive. So same kind of thing. Are you're what value are you getting? Because there's nothing that's free. I mean, I don't even think breathing is free anymore. Air I don't think is even free. But like anything in life, there's fees attached to anything. So it's really as long, understanding that you're going to have commissions and fees in any product that you have. You already have them now, whether you're working with an advisor or not. You have them in your 401k and so on and so forth. So it's just a matter of what kind of value are you getting for the fees that you're paying. What percentage of people, Sean, would you estimate have higher portfolio costs than they realize? Just give me a ballpark.
I would venture to guess that there's a larger chunk than not that believe that their fee structure is lower than it actually is.
Okay. So you think probably more people than less?
Yeah. Oh, yeah. I believe so. I don't have any data to back that up. That's just my opinion.
Well, you've seen a lot of people in 18 years, so
I can tell you though, when we do an evaluation and if we dig deep on the fee structure, in many cases the fee structure that's being currently paid is higher than what they expected.
All right, Sean. Well, I think with that, my friend, I think we're going to wrap it up this week, and I hope you have yourself a fantastic week, and I look forward to talking to you soon.
Sounds good. We'll talk to you soon.
We'll talk to you next time right here on Retirement Elevated with Sean Lee.
Investment advisory services offered through Elevated Capital Advisors, LLC, and SEC registered investment